Trader Mawira back again with another one. This is the current price action as we speak right now, and this is the last 3 days. This is a 15-minute time frame. So as you know, I trade from, or rather now you know what I'm about to say. I trade from 10 a.m. PST to 2 p.m. PST. So I want us to go and look at the day before yesterday because something interesting happen. So let's just jump there, take the replay button, and will come here. Let's head on over to the 1 minute time frame, and seems like the data point is unavailable. Let's try that one more time, see if it will work. If it doesn't, we'll just go to a different provider. Replay. Okay, so this is the 1 minute time frame, right? So that window that I showed you that looks so small, right, it's gonna be a couple of candles, right, on a 1 minute time frame. So this is what I want us to look at, and you already know my plan, which is quite simple. I might maybe need to study a little bit, but just a few hours you should be able to understand what the terminologies are, right? So I have like a video that I did. I will put the link in the description, and I go somewhat extensively into what all these high highs and lower lows and breakout structure and the fibs are. And if you'd like some more explanation, please leave a comment below. Of course, after you like, subscribe, and comment, of which you'll be leaving a comment. Okay, so let's go. So this is the plan that we're using right now. So let's make these candles a little bit bigger, like that. I don't want to use so much time, just a quick review. Let's start. This is 10 a.m. so we're looking for a high and a high and a higher low, or a low and a lower low and a lower high, which is the first step. So if you're going short, we're looking for high and a higher high. If we're going long, we're looking for a low, lower low and a lower high before we go to the next step. So this plan is meant to keep us into safe trades, and it's somewhat extremely safe that it might keep you out from some trades, but pretty much that's what I want. I'd rather that, like, be slow but be sure. And remember guys, I use it after 10 a.m. PST, so if you want to use it before that time, you are on your own. Price tends to be a little bit more erratic, a little bit more volatile before this time. Not that it cannot be volatile, but 6:30 is when the market opens, and this Dow Jones will be, man, it can be a little bit choppy. So if you're a beginner, then I feel like this is the best time, but as you grow, you kind of find your own spot. And for me, that's my spot. From back testing, I find that I get most wins between 10 a.m. to the close of the market. So without further ado, let's go and start this. So we're looking for a low, blah blah, either step 1 or step 1 on the long, step 1 on short, or over short. So we have a low, so we have nothing, but we had a potential high and high. So there's nothing right there. We have a high, nothing. We have a high, then a breaking structure, so nothing. We have a high, we have a low, higher low, nothing. We have a low, lower low, and okay, this was a good one, but we have a low and a lower low and a higher low and a breaking structure right here. But I like it when we break the structure that's in between the low and the lower low, so no trade. Looking at this, we have a high and a higher high and a higher low, and we break. Okay, there seems to be something here, guys. So we have a high, higher, and then we have a low that breaks actually doesn't break structure. It does not break structure, so we have a trade here. And then, oh wow, okay, let's see. I think we have something here. So that's a high, border 16, 12. We have a high, and we have a higher low right there. So number 1 is good, and all this happened before the break, because my breaking structure is when price closes below the price between a high and a higher high closes between. So we did get a break of structure right here, and we do, this is the higher low right there. So we have a high and a high high and a higher low, and market came down. So that fits our narrative. So we're going short. So that one's done. What am I looking for? Trend line and the break of structure. So number 2, we go to the fib, which is gonna be between the higher low. Wait a minute, we are going short, right? And the new high, that's wrong, and the new low, and the new low, like that. So we put our fib from the higher low to the new low, which is this one, and then we put our entry at 0.62 and our stop loss right above the higher low, and then our targets is right there. So this was a different fib. Let's change that to 62, and we don't need this, and there we have it. And as you can see, this was a big loss. The market came back and went and took us out, and so there we have a -1. That happens. It is normal. Losses are inevitable. It's part of the business. So that would have been a -1 day. So let's hunt for another one. Okay, we do have something here. We have a low, a lower low, and a lower high, but we never had any break of structure. And then here we have something. So we have let me see, we have, this is a low right there. I think also this is a low. Yeah, this is the low right there, and then a lower low, and then we have a lower high, because I think these are the same. This is 340, 74, 66. So this is below this one. What is that? 340, 74, that's high. Oh, we're talking a low. 340, 53, 340, 54. So this is higher than that one. So there's no lower low. But here we have a lower low. So guys, I'm seeing something, and then we do have a break of structure between the low and the lower low. So is this a low? What is that? 340, 61, 340, 62, 340, 66. So yeah, that's the low right there. So we do have alright, so what are you doing here? Okay, so right there we have a low. Too big, let's do 12. And then we do have a lower low right there, and then we do have a higher low right there, a higher low right there. And then we do have a breaking structure, which is the high between the low, which is the lows right here, and the lower low. So that's just perfect. And we do have a break of structure right there. As you know, my break of structure is when price, the candle on its way up, closes above that high. That is good enough for me for a break of structure. This is also kind of this good displacement for me. So okay, so what we do is we take our fib from the higher low to the new high. So if I was to check this out, we're going long, so we do have a low, a lower low, and a higher low right there. Then we have a break of structure, and we just set up the fib entry, which is from the lower, the higher low to the new high. Now look what happens again. This was quite interesting. So our entry point is 0.62, and our stop loss goes right below the higher low, and our take profit is 1 standard deviation. And if it worked, we would have taken partials at 0.62 extension, fib extension level, or standard deviation. But look what happened. Price came down, only hit the 0.5, and then it just went on to hit our targets without engaging us. So this one we missed that trade. Now that will happen quite a few times. So losses and missing trades, that will happen quite a few times. Now there is an advanced strategy of how you would have entered in here, and we can look into that later, but I will credit that to Mr. ICT, because this would be an order block, that would be a displacement, and when it displaced there was a little fair value gap right there, so that would be our entry, either the fair value gap premium high or the fair value gap discount low, or at the open price of this last down candle before the market went up. And you can see that that's pretty much where the price came, but that is not in our criteria, so we will leave that one alone. And if we did that, let's say we took that high, then you want to look at the highs, so that would be something like that. So you take a partial right there, so that would be a 1.62, that's why you'll be taking a partial, maybe something else at that high, and then maybe something else at that high right there, and then maybe leave a runner to some other PD array. But that's a little bit advanced, we don't need to worry about that right now. For now, let's just stick to what we have, which is pretty much simple and straight to the point. And as we know, no strategy is 100%, right? All you want is just something that gives you better odds in winning. So I don't know why these ones do not want to come out. So now, so far we have a loss, we have a missed trade, and what happened to those levels? My good lord. Oh yeah. Okay, that's what we have for now. So let's go back to the plan. Let's see what else we have. Blah la 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 la. Okay, so let's keep going, see if there's something else. So of course there's nothing here. Here's something else that was interesting, right? So this year we have a low, we have a lower low, and we have a higher low, but break on structure, which is the high between the low and the lower low, happened before the higher low was formed. So already that does not fit my plan, right? It just does not fit my plan, because I need to see a low and a lower low and a lower high before anything else happens. So but what we see is we have a low and a lower low, a higher low and another higher low, and then price of course respected the higher low and the new high. It respected and came back to that pretty much our zone, which is the 0.62, and it went on and hit our target super hella fast, but it does not meet my criteria. So that one would have been a no trade, so that would have been a missed trade, or it does not, yeah, so no trade. Yeah, it's safe, but it's also keeping us out of some trades, but that's what you get with a pretty nice strategy. So here we have a high, so that's cancelled. We have a high, and higher low, but no breaking structure to the downside, so nothing there. And then we have nothing here. Those are equal lows, so nothing there, nothing here. Okay, we might have something here, but we have a high, then we have a high, then we have a higher low, right? So now we wait for a break of structure. Wow, look at that, guys. Wait, where did you see? We have a high and a high. So what is that high? 34187. What is that high? 34. So those are equal lows, so no trade. So pretty much looks like this day would have been a negative day, but even though it would have been a negative day, we only lost one trade. So if you're just risking 1% per trade, today would have just been a minus 1%, and we had a potential here to make something good, but it just didn't come to us, and it's okay. So pretty much this was a negative 1% day, and as you can see, it was a lot of price action, but our entry criteria did help us to not keep on going in and going out, because that's how you end up losing your account. So it is still like a solid entry criteria for me, and we're just not gonna be winning trades all the time, and sometimes we're also gonna be missing trades, but it's part of the game. So hii ingekuwa siku tunaita kerai and I'll see you on the next video. Hope you enjoyed, hope you learned something, hope you're getting this strategy in your in your in your system. And if you look at it, it's pretty much something that's basic. It's really price action, kind of telling you when the market is turning. It doesn't have to be turning, you know, like to go all the way you know, to some like new highs, but that turn, when it materializes, it gives you something to play along with. So this is something that you can even, you know, pair up with other strategies, right, of which we're gonna be looking, we're gonna go into it in the future. Maybe introduce a few in the introduce a few moving averages if we have to, or maybe introduce the RSI and try to look for divergence, because sometimes it does really work. You don't want to go to that route, but you know, if it works, it works. And most importantly, find a window that you can be trading, stay in, kind of master that zone. Look at it every day, every day the market is open, and you'll start seeing some patterns repeat themselves. For like this one, I've discovered that we'll have it gives you like maybe 1 or 2 or 3 opportunities for this setup, and pretty much that's what I want. So I hunt, for example, this one I would have stayed from 10 to 10:50. All right, so that's 50 minutes of hunting, just looking for that, and then you fail, and then I'd stay again to 11:30. So that's pretty much another 45 minutes, kind of, you're just waiting for your whatever to come through, and then would have stayed again up to around 12:15. So that's like what, 2 hours 15 minutes just hunting, taking your time and being slow, because remember, you are dealing with live money. I'm just, okay, you start with the demo account, and then later you can go to dealing with a live account. But it's somewhat slow, but it's also safe. Check it out for yourself. Make sure you check out that video to see how I explained it extensively. It's a 43-minute video, and I hope you enjoyed. So that's it from me, and I'll see you on the next one. Trader Mawira, and I'm out.